watching Business Incorporated live from Channels HQ. Coming up, Rwanda's central bank raises lending rate to 6.5% to fight rising cost of living. The telecom industry in Ghana contributed 4.3 billion cedis in taxes to the Ghanaian economy. Plus, the European Bank for Reconstruction and Development has announced an $80 million loan for Egypt's green project. Great to have you join us. I'm Ladi Williams. First off, let's look at what's happening with the markets now, starting with Africa. We see it's not looking so bad right here. We see Nigeria's NGX there up 0.14%. South Africa, GSC 73,267 points. And we see Egypt up 0.57%. We see Kenya closing marginally positive yesterday. Well, to drill down on the NGX market now, see what's driving it. We have joined us Samuel Bameke, investment research analyst at Mary Stem. Great to have you on the program.
Hi, thanks for having me. Good afternoon.
Yeah, so I see, Samuel, I see it's green right now on the NGX. What's driving the market?
Yeah, so far on the NGX, we've seen major bellwethers moving the market so far, and we've seen buying sentiment on bellwethers. 17 tickers are currently on the green, while we have 18 down. For the bellwethers, you have WAPCO. WAPCO is up by 5.97%. We also have Zenith up by 3.98%, GTCO by 2.21%. We have Access by 1.1%. Also, Boafoods by 0.80%, and MTN by 0.32%. So majorly is the bellwethers that are, running the show in the markets today.
Quite interesting. And, after we got that massive hot inflation number for October yesterday, it seems the market is shrugging that off.
Well, I would not say that the market is totally shrugging that off. I mean, what is happening now is the dynamics that we've been seeing in recent times. For 2 weeks, 2 weeks ago, it was Airtel and Dansem, driving the market, and this week the same thing. On Monday, we had MTN, dragging the market down. Yesterday, it was WAPCO dragging the market down, and today we are seeing buying interest on bellwethers, which have, been the dynamics in the market in recent times. And the valuation on this market, we have good upsides on major heavyweight tickers on the Nigerian stock market at this time. So that has been the major driver. But speaking to inflation, the general sentiment is low. If you look at activity levels, you would still see that the sentiment is low. The tickers that are losing are more than the tickers that are gaining in the market at this time.
And going with what you just said now, how do you see the market closing today?
Well, the probability for the market to close up today is high. So I would expect that the market will close up today, given the kind of volumes we are seeing on the heavyweight tickers and the kind of percentage they are doing today, especially on WAPCO, Boafoods, MTN, and especially on Zenith Bank and GTCO. They should be able to, pull the market to the green zone today.
All right, we'll keep tracking to see how it closes. Thank you so much. That was Samuel Bameke, investment research analyst at Mary Stem. Thank you. All right, now let's moving on to the Middle East now. See, most indexes are down again at Intra-Day today, just like we had yesterday. It's all red, with Dubai in the UAE, they're down over 1%. We see Abu Dhabi down 0.58%. Other markets we track, Saudi Arabia, Qatar, also in the red at Intra-Day. We're checking to see, but it's looking like it's going to close negative, looking at how the market is looking in the Middle East right now. So let's move on to Europe. We see temperatures in Germany are dropping. Heating season has ultimately started, which does give concern to many people on how the country will get through the winter, with gas deliveries from Russia cut in the wake of the Kremlin's war in Ukraine. Germany has been storing gas for the coming months, as well as trying to find fresh sources of energy. Well, let's have Chris Kober now to bring us up to speed on what's going on. Chris, where do levels of Germany's gas storage facilities stand now?
Germany's gas storage facilities are now at full capacity. 245.44 terawatt hours of natural gas were registered in the facilities this week. Fresh data shows this was slightly above the 100% of 245.39 terawatt hours, which indicates the so-called working gas volume. The German government had aimed to have its gas storage sites 95% full by November, but it reached the target ahead of time in mid-October. The country, which for years was heavily reliant on Russian gas imports, has been scrambling to bolster its reserves after Russia cut deliveries in the wake of its invasion of Ukraine. Now, these efforts have included LNG imports from producers such as Norway and the United States. So 245 terawatt hours of natural gas in storage facilities. For comparison, in January and February this year, a total of just under 227 terawatt hours of natural gas were consumed in Germany, according to the country's network agency, which is also pointing out that in times of very low temperatures, reserves could also only last for a shorter period of time. So a completely storage facilities don't mean that the country is out of the woods yet. The network agency reiterated its advice for households and companies to reduce their gas consumption, which they have been doing so far. Recent gas use has been below the average consumption of the last 4 years, the agency says. That was in part made possible by mild autumn weather. Temperatures on average were almost 2% higher than in previous years, meaning there was less need for heating than might otherwise have been expected.
And we also see Germany has also been building terminals that can process liquefied natural gas delivered by ship. How are these efforts coming along?
They've reached a significant milestone. Construction of the first floating terminal for liquefied natural gas at the North Sea port of Wilhelmshaven is completed. Economy Minister Robert Habeck said that it would become functional around the turn of the year. Now, the floating storage and regasification unit will be moored at a now expanded pier and enabled to regasify LNG arriving on special tankers. 5 such terminals are planned in total, as well as a privately chartered and operated unit, which is expected to be operational at the end of the year as well. Now, taken together, these 6 floating storage and regasification units could theoretically cover a third of Germany's annual gas needs, based on the around 90 billion cubic meters consumed last year. They are part of a drive to prevent an energy crunch, which also includes temporarily reactivating old oil and coal-fired power stations and extending the life of Germany's 3 last nuclear power plants, which were supposed to be switched off at the end of this year until mid-April. Now, the head of Germany's network agency says the gas storage facilities being full and the first LNG quay being completed was the result of good political decisions, and this momentum needed to be carried over into the expansion of renewables and their grids.
All right, Chris, give us a quick market update in Europe.
Stocks are mostly retreating this morning amid geopolitical concerns and some profit-taking. Germany's blue chips index DAX is down around 1/3% in early parts of today's trading session. Poland said a missile, most probably Russian-made, as they said, had struck a village in the country's east, killing 2 people. Now, the Western military alliance NATO has been holding an emergency meeting over how to respond to the incident. Concerns over possible further escalation of the Ukraine war are offsetting another positive U.S. inflation report which fanned hopes of a slowdown in the U.S. Federal Reserve's rate hike campaign. Yesterday's below forecast reading on wholesale prices could provide extra room for the central bank to take its foot off the pedal when raising borrowing costs and possibly easing pressure on the economy, analysts are saying. Still, central banks' tough battle against inflation is highlighted again today by data showing UK prices rose more than 11% last month, which is a fresh 4-decade high, and which are figures that are likely to keep fueling demand for the government to do more to ease the nation's cost of living crisis. So investors will keep a close eye on the new tax and spending plans the UK government is releasing today.
And investors also watching out for geopolitics also at this time. Thank you, Chris Koba, right there from Berlin, giving us the details from Europe. Moving on to what other markets now. Shares in Asia Pacific were mostly lower today as world leaders gathered in Bali, Indonesia, for a second day of the group of 20 summit. Polish authorities say the Russian-made missile killed 2 citizens, which President Duda described as an isolated incident, adding an investigation is underway. In Japan, reversed earlier losses to close 0.14% higher at 28,028 points. You see behind me there. We see the Nikkei, that's up 0.14%. Shanghai, 3,119 points, down 0.45%. And we see the Shenzhen component slip by 1.02%. At 11,235 points. MSCI's broadest index of Asia-Pacific shares outside Japan fell 0.67%. And the stock futures rose today as investors weighed another lighter than expected inflation report and looked ahead to retail sales data. Futures tied to the Dow Jones Industrial Average added 55 points, or 0.2%. The S&P 500 and NASDAQ 100 futures gained 0.2 and 0.1% respectively. Well, let's get a sense of yesterday's close from our correspondent, Maria Bird.
Tuesday, as the Dow Jones was up by 0.17%, the S&P 500 up by 0.87%, and the heavy tech NASDAQ was up by 1.45%. This is all in direct relation to the release of the inflation report, which showed a slowing of inflation rate increases in the U.S. This could also show that the Federal Reserve Bank may be able to reduce the increase of interest rate hikes. But they are not trying to repeat the 1970s where they slowed down on tightening monetary policies and ended up creating a longer span of inflation increases in the U.S. We can definitely expect to see a monetary policy tightening continue into 2023.
And that was Maria Bird there giving us details of yesterday's close. Let's move on now to oil markets. The oil prices rose today, erasing earlier losses after an incident involving a commercial vessel off the coast of Oman. But rising COVID-19 cases in China capped gains. Brent crude futures gained 53 cents to $94.39 a barrel. And the U.S. WTI crude futures rose 28 cents to $87.20 a barrel. Both benchmarks fell more than $1 earlier in the session. The International Energy Agency forecasts demand growth to slow to 1.6 million barrels per day in 2023 from 2.1 million barrels per day this year. And gold prices rose as the dollar eased, while reports of a tanker being hit by a projectile off the coast of Oman also boosted the safe haven metals appeal. Spot gold rose 0.2% to $1,780 per ounce, while the U.S. gold futures gained 0.5% to $1,785. U.S. Navy's Fifth Fleet said it was aware of an incident in the Gulf of Oman involving a commercial vessel. Now to our next conversation. The African connectivity and cloud computing market is generating a lot of interest and deals as players position themselves for the boom in data services on the African continent. Over the last 4 years, international cloud companies have rushed to develop data centers on the African continent. Let's talk now to Naresh Tukani, head of Fabric at Inc. Join us via Zoom. Great to have you on the program.
Yeah, hello. Thank you for having me here.
So, what are your thoughts on the future of cloud computing on the African continent?
Yeah, I would say it's exciting than any other word, right? So as you see that the companies are slowly realizing that given either the COVID situation that you have been seeing in the last 2, 3 years, that there is definitely a lot of incentives in terms of leveraging the cloud computing for day-to-day operations as well. Previously, when we talked to the clients, it used to be a very tough challenge for them to understand what does it mean, why do we need to really sort of go to a cloud computing, we're all happy with the existing way of doing things. But nowadays, it is not the same, right? They're really working with us in terms of understanding how can we help them in the so-called digital transformation, where the cloud computing is having a very big portion of chunk there. And as we see that, if you try to see the digitization of how the world is across so far, when you compare to the US, the Europe, Asia Pac, and the African continent, we can typically say that it used to be, people used to see from an economic perspective as 1-1-1-0, right? Zero for the Africa, not contributing much from the digitization perspective. But however, the things have drastically changed in the last few years and as we go into the future. So we definitely see that all the companies like Amazon Web Services, Microsoft Azure, Google Cloud, and the likes of that are definitely investing a lot in the African continent, precisely for the reason that one thing, the companies are understanding the value of that, and secondly is essentially in terms of the new startups and the young population that is coming within the continent, they obviously need to tap into that the potential, and definitely all the startups and the new companies that you are seeing out there require some capabilities like cloud computing in terms of innovation and to address the market larger needs, right? So just from that perspective, we definitely see a lot of excitement. The companies moving into the cloud computing services in a very big way as of.
Yeah, it looks like quite an exciting future there, but obviously I'm sure there's some challenges. What kind of solutions are being preferred?
Yeah, so if we try to see carefully what is happening in the African continent, we can attribute to the four foundational pillars are improving drastically. So one thing is essentially that huge amount of capacity that is coming into the continent from the subsea capacity perspective, be it like the likes of Google establishing Equiano capacity, or the Facebook working on to Africa, for example, in terms of bringing a huge amount of terabyte into the continent, the subsea capacity. This is definitely going to have a huge amount of pressure price points into the ecosystem, which is good for everybody. The second thing is essentially around, there is a huge amount of terrestrial fiber capacity that is being laid out within the continent, right? And the third one is essentially about the huge amount of data centers, the co-locations that are coming in multiple parts of Africa today, which you can see that a significant amount of megawatt of power being from the data center footprint is being largely increased as of now. And the fourth pillar, I would say, is definitely the hyperscalers, as we just touched upon. So when you have all these entities that you're coming from the digitization perspective entering into the continent, it is very important for somebody and for the end clients like enterprises to how can you stitch all of these things together? How can you ensure that all the cost economics, the agility, the programmability that you want from this ecosystem, how are you going to eventually get that? Should I work with multiple ecosystem partners, the stakeholders one by one, and then try to stitch my own solution? Again, that will lead to its own increased skill sets, increase in the cost, etc. So the systemic obstacle we can say basically is that when the technology is coming into Africa, how can you essentially provide that easy transformation for the enterprises to embrace all these technologies? So in that context, the solutions that we are creating from Inc., which is a leading edge solution provider, is essentially that to address that specific solution. So we have recently launched a product called Inc Fabric, which is going to take away this complexity from the enterprise's perspective. So we are going to work in some context, right, with the underlying ecosystem partners, abstract the complete ecosystem, so that we are going to provide a easy to use interface. Essentially, we are calling the Inc Fabric as network as a service, which means in the cloud world, if you try to spin up a virtual machine, write a compute instance on Amazon in a matter of minutes, you should be able to get that instance in a matter of minutes. In the same way, the thought process for us is that when the enterprises have so many pieces to connect together, why can't we connect all the enterprise branches and their multi-cloud requirements in a matter of minutes? So from that perspective, in Fabric, we are trying to decrease that technology barrier for the enterprises to enter into this new world of exciting technologies by providing a single easy-to-use platform where they can essentially drag and drop the enterprises, click, based on the requirements, the connectivity in a drag and drop fashion, and they should be able to launch the services in minutes. So in that way, we realize that while the technology is there, somebody has to take that step foot in terms of providing an easy way so that it definitely helps enterprises integrate.
All right, but how do you see cloud computing changing the way Africans do business on the continent?
Oh, definitely, right? As we just touched upon the COVID transformation and the realization about that, so we are significantly seeing a good amount of interest from all the enterprises out there saying that we want to leverage the cloud computing, not necessarily from one cloud like Amazon, but they're interested in saying that I want to take the best breed of solutions, let us say from Google Cloud, which for machine learning or artificial intelligence applications, maybe from Oracle Cloud for the database, and could be from Azure from some other services. So essentially the idea for them is that if you go into the future and see all the enterprises will be driven by multi-cloud requirements, because they don't want to get into essentially a cloud vendor lock-in kind of a situation. So we definitely see a good amount of requirement, or connectivity requirements that has to shape up within the continent. Because let us say if you see the cloud computing essentially is right now available only in South Africa, in Johannesburg and Cape Town. But the question is, we are talking of a continent like Africa, how are you going to cater to the requirements for the West Africa, East Africa, right? So from that perspective, there's a good amount of solutions around edge computing is going to arise in the continent as we go into the future, where and the edge computing definitely will help the end clients in a very big way. Because some of the clients have been from the local loss perspective, they have to ensure that the data is resident within their country and not crossing the boundaries. But while the cloud computing is within Amazon in South Africa, how can you not cross the boundary in Nigeria, for example? So from that perspective, the cloud providers are going to bring their cloud agility into the countries like Nigeria and other places closer to where the user is, right? So yeah, from that perspective, we see that as we go into the future, edge computing and cloud computing are going to play a very big role, and enterprises are going to leverage the latest technologies like Web 3.0, blockchain, artificial intelligence as well.
All right. Well, we'll keep tracking to see growth in that sector. Thank you so much, Naresh Chikani, Head of Fabric Inc. Thank you.
Thank you very much.
All right. Now let's move on to other stories. Now, see, the Rwandan Central Bank yesterday raised its lending rate from 6.0% to 6.5% as it battles a drastic rise in the cost of living, high food prices, as well as external shocks, including the impact of the war between Russia and Ukraine, have fueled an increase in the prices of imported commodities, including oil, gas, fertilizers, and sunflower seed oils. This is the third hike by the country's central bank rate-setting monetary policy committee this year, which says the recent drastic increase in prices remains a major concern. According to the central bank governor, inflation in the country has risen sharply due to high prices of imported food goods, as well as local food prices, as the agricultural output remains constrained. And the telecommunication industry contributed about 4.3 billion cedis in taxes to the Ghanaian economy last year, and the amount represents 7.7% of government revenue for the period in review. Players in the sector also created 6,100 direct jobs and 1.2 million indirect jobs last year, bringing the forward to the critical role of telecommunications in bridging the unemployment gap. This came to light when the Chief Executive Officer of the Ghana Chambers of Telecommunications launched the Mobile Industry Transparency Initiative 2021 in Accra. And that's it on Business Incorporated, and that's how your money performed at Intra-Day. Thank you so much for watching. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, move over to videos, and you can see all our productions. Thank you for watching. I'm Ladi Williams. Bye for now.